Hello, I'm Rohini. Welcome to Gradient's weekly roundup of Sri Lanka's key economic, industry and company news for week ending 11th June 2021. In this week's roundup, we cover the following topics. First up, we have the news of the International Credit Rating Agency S&P affirming its CCC+ and C ratings on Sri Lanka's long-term and short-term credit respectively. In December 2020, S&P downgraded the rating on Sri Lanka's long-term foreign and local currency sovereign credit from B- to CCC+, while the rating on short-term foreign and local currency credit was downgraded from B to C. The key factors attributing to these revisions were concerns regarding the country's debt servicing capacity, heightened by the expectation of a wider budget deficit in 2021 after taking into account the pandemic's impact on the country's business operations. However, the ratings agency determined the overall outlook to be stable based on their view that the government has access to official funding sources, although a lot will depend on the economic trajectory and business conditions. In May 2021, S&P affirmed the CCC+ and C ratings on Sri Lanka's long-term foreign and local currency sovereign credit and short-term foreign and local currency credit, respectively. Given the country's challenging fiscal and economic situation over the next 6 to 12 months, we feel such ratings are likely to remain unchanged. Next up, we have an update on the fertilizer situation in Sri Lanka. Early this year, the government announced that measures will be taken to ban import of chemical fertilizer to Sri Lanka, considering its adverse effects on the environment and health of people, as highlighted by sector experts. The government has indicated plans to move towards a 100% organic fertilizer policy in future. To this end, Cabinet approval has been granted for a proposal to locally manufacture organic fertilizer as a pilot project, starting off with the North Central Province. Some agricultural experts, however, have cautioned that moving away from chemical fertilizer entirely may decrease yields and affect supply dynamics negatively, as it is claimed that the yield per acre from using organic fertilizer can be as less as 20% from that of using chemical fertilizer. This not only reduces economies of scale but necessitates the expansion of land usage, impacting the environment. According to central bank data, for the year 2020, Sri Lanka imported 952,000 metric tons of fertilizer at a total value of USD 259 million. Around 325,000 metric tons of fertilizer was issued for paddy farming alone in 2020. Reportedly, the full fertilizer requirement for paddy cultivation is currently provided by the government, whereas the private sector fulfills around 80% of the fertilizer demand for other crops. Key private sector players engaged in fertilizer import are CIC, Haleys and Bowers. We will be closely tracking how the import ban will be affecting the aforementioned companies in time to come. Moving on to our next update, several hotels owned by the state are expected to go public in the near future. At the Sri Lanka Investment Forum, the Treasury Secretary, Mr. S.R. Artigala, stated that a number of state-owned hotels will be listed on the Colombo Stock Exchange in the near future via a company named Selendiva, formed as an investment arm of the government mainly to acquire inefficient assets and restructure them to raise funds. It was further mentioned that state-run hotels Grand Hyatt, Grand Oriental and Hilton will be consolidated under Selendiva Leisure, a special purpose vehicle of Selendiva. Our final key update for the week is regarding Sri Lanka's foreign debt position. At the same investor forum, the Secretary to the President, Mr. P.B. Jayasundara, mentions that Sri Lanka will honor a bullet payment due in July on a $1 billion sovereign bond facility, thereby maintaining a default-free track record. The Secretary to the President also pointed out that Sri Lanka managed to reduce foreign debt to $49.2 billion from $54.8 billion a year earlier, aided by initiatives to control and substitute imports while strengthening exports. Sri Lanka's debt to GDP soared over 100% in 2020 as a negative growing economy impacted by COVID, the 2019 Easter attacks, November 2019 tax cuts, etc., necessitating heavy borrowing for recurrent expenditure. Official reserves were down to $4 billion in May 2021, down 10.1% on a month-on-month basis and covering just 2.9 months of imports, mainly due to repayments worth $1.5 billion in May, as indicated by central bank data. In other key news, listed firms deliver highest ever earnings in the March quarter. According to earnings data compiled by First Capital Research, listed entities of the Colombo Stock Exchange recorded a significant 206.9% year-on-year increase in after-tax profits for the January to March quarter, driven by economic activity and consumer demand. First Capital notes that the largest contributor to overall earnings is the banking, finance, and insurance sector. Prime Lands Residency started trading in the Colombo Stock Exchange, making it the third IPO listing in 2021. The stock was up almost 10% at the end of its first trading day. Tourist arrivals during January to March 2021 were 15,294, down by 97% on a year-on-year basis. About 40% of the arrivals were from countries such as Germany, US, UK, and Russia. Asia Securities estimates that tourist arrivals for 2021 will be in the range of 175,000 to 250,000. And that's a wrap for this week today. Do join us again next week for another recap of the week's business happenings, where we will be tracking topics such as passing of the new SEC bill in Parliament, port city developments, clarity on government's strategy to repay debt over the next 6 to 12 months, acquiring funds for significant infrastructure projects, among a score of other news that is likely to hit the headlines, brought to you by Gradient Alliance. Have a great day, stay safe and stay healthy. This program is co-produced by Gradient Alliance and Atheno.